Melbourne's property market is a perfect storm. Now, Melbourne's property market is creating a lot of hype, and I'm talking about 2 to 5 years of serious potential growth. And here's the crazy part. We haven't seen a setup like this in decades. In fact, not since after World War II. Let me take you back. Back then, Australia was dealing with a massive housing shortage, a booming population, and not enough skilled workers, and low unemployment, and guess what? Falling interest rates as well. This is exactly what's happening in 2025. Now, after the Second World War, the houses prices tripled in the next 6 years. Now, I'm not saying that this is exactly what's going to happen or what the growth is going to look like, but you would have to squint really, really hard to come up with the reason that the property market in Melbourne might not actually rise anytime soon. Now, even RBA is quietly nudging in that direction. In the last board meeting, they didn't outright and say, hey, everybody get ready for the boom. But if you read between the lines, they were very aware that when the interest rate drop happens, lending would increase, people would borrow more money, and the prices would shoot up. So let's zoom in on interest rate. The futures market is pricing in a drop of around 2.9% by the end of the year. We're talking about, percentage drop. That's massive. You're talking about potential rate cuts of more than 5% in 2025. Now, again, this is in percentage terms. I'm not talking about 5% rate drop. And that's not all. Peter Dutton recently floated a proposal to reduce 3% serviceability buffers that the bank use when they're assessing their borrowing power. Now, what if that happens? Now, of course, Peter didn't win the election, but that idea is still there, and the borrowing capacity jumps quite significantly, and that's the rocket fuel for the prices that you're looking for. Plus, the investor activity has always ramped up when the lending becomes easier. Looser credit conditions always supercharge the next phase for the property investing. Now, I know what some of you might be thinking. Hasn't the market already grown? Hasn't we seen the post-COVID boom? You see a lot of property profits talking about, hey, this is COVID 2.0. Well, not really, if you really think about it. National prices have only climbed about 39% over the last 5 years. That might feel like a boom, but remember, in Australia, prices historically doubles every 7 to 12 years. Worst case scenario, 10 to 12 years. So is this the last stretch? It's actually below the average. And Melbourne, it's really, really underperformed. Less than 15% growth cumulative over the since 2019. Compared to Perth or Adelaide, Melbourne is twice the size when it comes to population. So it's been running really, really hot in Adelaide. In Perth, imagine what the Melbourne is going to do. Now, this is what tells me Melbourne has a lot of potential. Let's not forget about, particular areas of pockets in Melbourne that are going to do quite well. These are the affordable pockets under $750,000, especially in the northwest and the southwest. But one suburb that I want to talk about today is Broadmeadows. Yeah, I know what you're thinking. It has a bit of reputation, crime, low-income demographics, that kind of thing. Now, I'm not talking specifically about Broadmeadows. There are areas around Broadmeadows like Gladstone, West Meadows, Tullamarine. Yes, all of these areas had some of reputation, crime, low-income demographics. But you know what? Capital growth does not really only care about these things. Look at what happened in Paraloa in Adelaide, or Para Hills in Adelaide, Armadale in Perth, Petrie in Brisbane, Beenleigh in Brisbane, or parts of Western Sydney like Blacktown or Auburn. These areas have doubled, even tripled in value over 10 to 15 years despite their reputation. So what stands out, and how do you know that this is not one of those Mount Druids of Sydney? Let's break this down. Only 15 kilometers from Melbourne CBD. Median house price of a 3-bedroom is around $600,000 to $650,000. Rental yields still decent at around 4.3%. Vacancy rates super tight. Very limited new freestanding housing available, and under 20 houses currently on the market. Brand new houses selling for about $800,000 to $850,000 in Tullamarine as of today. There's about $190 million of infrastructure underway, and the big one, the $10 billion Melbourne Airport rail link coming very soon. That is going to be a game changer for accessibility for a lot of these pockets of sunshine, St. Albans, Broadmeadows. Now, here is one catch. Unemployment is sitting at around 15%, which is quite high. But if you zoom in, you'll find parts of the areas within Hume City Council which have higher owner-occupier rates and better employment stats. So you've got to be really, really selective, but the opportunity is real. Now, before we wrap up, a real quick heads up, if you're thinking about using a buyer's agent, especially in Melbourne, you better be really, really careful. There's a buyer's agent in literally under every rock. There's a flood of underqualified agents, entering this space lately. The Real Estate Agents Association has raised some serious concerns about how many people, or inexperienced people, so-called property gurus with little or no knowledge, who have come through the post-COVID boom calling themselves property experts. Now, the bar to the entry is quite significantly low, and there are sales agents who are usually on the other side of the deal are also talking about being buyer's agents and jumping on the other side of the town. So if you're going to hire one, don't just hand over your trust. Ask the tough questions. Make sure that you ask them to justify their recommendations. And if they can't justify, walk away from the deal and the buyer's agents. Or better yet, learn to do it yourself. I teach that through Australian Property Academy, where you can do it yourself, a structured, data-driven way to make smart property decisions. So if you can't hire a trusted buyer's agent, you can always go out there and learn about yourself and do it yourself. If you want to learn more about astute property investors, check out our podcast, Australian Property Academy with Moxin Reza, or on Spotify and Acast, where you can search Help Me Buy a Property podcast. We also have a Facebook group called Property Investment Australia. We have over 12,000 Aussies learning and growing as astute property investors every day. So feel free to reach out. Take care, stay safe, keep smiling, keep investing. This is Moss checking out. Adios.